Welcome all apes and future apes to the Billionaire Boys Club. The place where future billionaires come to learn about making money, avoiding taxes, financial crime, and of course, giving back to those less fortunate than you. The rich and super rich have an actual formula to avoid paying taxes. In this video, we are going to teach you what it is. So sit back, relax, and don't forget, if you learned something, make sure to subscribe below. And while you're there, drop us a like and a comment to tell us what you learned. Okay apes, in today's episode of the BDC, we will be looking at a whole new method of tax evasion. Namely, spending other people's money instead of your own so you don't have to pay tax on it. Let's look at an example really quick. Say I'm a billionaire and I want to go out on a night on the town. An average night out for me will cost me $100,000 because I'm a billionaire, remember? If I was to pay taxes like the regular Puris, that night out would cost me, assuming 29.8% US average tax rate, $129,800. But if I was able to borrow that money from the bank, who give me preferential interest rates, only available to the super rich of under 1%, then the night out would only cost me $101,000. See how I just saved 28.8%, or $28,800 on this one expenditure. Now multiply that across all my money. That's one of the many ways I avoid taxes. 1% interest rate is a lot better than 29.8% tax rate. Right? But it can't be that simple. Can it? Not only is it that simple, it's a freaking service offered by banks to the ultra-wealthy. As an example, Credit Suisse actually set up a specific department to offer lending services to the ultra-wealthy. Source in description. So let's think about it for a minute. Let's pretend I'm Larry Ellison, the co-founder of Oracle. I'm used to a certain standard of living, and in fact, I am famous for my lavish lifestyle. I collect mansions, yachts, aircraft, race cars, and art. So how am I going to pay for all this expensive showboating? Well, Oracle makes lots of money. I could pay myself a massive amount of salary. But then I'd have to pay a metric ton in tax, and my salary would be public information. So let's not do that. I can't sell my shares because 1. I'd have to pay capital gains tax on what I get. 2. I risk scaring the market and thus devaluing my company. 3. I'd lose some control of my company. But I really want more new boats. So, instead, I will go to my favorite bank and ask them for a loan. I already give them great business due to all my enterprise accounts, so I'm sure they will give me a great interest rate, less than 1%, and I won't have to pay any tax on that. Okay, so how much do I need? Maybe $10 billion? That should be enough, for now. So I'll just use my shares as collateral to get this loan. Larry Ellison has secured $10 billion worth of credit for his personal spending. Freaking puppy break.
Look what we have here. The first introduction. Now, Joy's puppies are about a week older. Hey, Yule. Easy. Don't ruin your cousin. And we have Levi, Wrangler, Ariat. That's Holly, Yule, Jingle, Elf, and Miss Noelle is right there. Sorry if I pay attention to my camera. Got all the puppies in the playroom for just a little bit. We're just gonna watch how they do together. Joy's puppies are a little bit bigger, about a week older. Although Oakley's puppies are pretty bold and adventurous already, so you just have to make sure the big guys don't squish the little guys. Look at the tails. Yes, we left oscillators with tails. Aussies have short tails. Cavaliers have long tails. And we went natural with these guys. We love the little waggy tails. Look at the tips on the tails. Got itch, baby girl? Is it that collar? I need to check the collar. The ribbon.
So how does this whole freaking thing work? Buy, borrow, die. This is it, apes. This is the code that the super rich, and even rich, use to avoid paying taxes. Let's break it down with an example, shall we? So let's pretend again that I'm a billionaire. I buy assets and assets only. But I can never sell these assets, otherwise, I would have to pay tax on them. Ever wonder why billionaires need so many houses? These assets continue to appreciate in value, and I pay no tax on that appreciation until I sell. But appreciation is no good to me by itself. I need cash to fund my lavish lifestyle. So I borrow against these assets. And as highlighted earlier, the banks love this, so they give me extra special interest rates, usually under 1%. These rates are not available to the general public, of course, because I'm special. But badass trader, you might be thinking, don't they still just have to pay back that loan? No. No, they don't. When I die, I can pass all these assets down to whoever I want. Tax-free. So I buy a house for $10 million. I borrow against that house over 30 years at 1% interest. But the house continues to appreciate. In 20 years, I die. The house value is now $20 million due to appreciation. My heirs inherit that house, sell it for $20 million, pay off my debt plus 1% interest, and are still left with $9,900,000 in tax-free inheritance. And of course, I already spent my $10 million on whatever I wanted before I died. Not bad, right? I think we need another puppy break after all this.
Come on, Penny. Come on, Stella. Good girls. Penny. Good girl. That's a lot of puppies.
Okay, so now that we are all caught up on how this buy borrow die system works, who is actually using this strategy? Well, it's likely everyone with 7 figures or more in their bank account, but let's look at some we know about. A widely cited article by ProPublica states that they managed to obtain IRS tax records of some of the biggest billionaires in the US. Link to source in description. And while this shows the fractional tax these guys paid, it also cites how much debt some of these guys are in due to the buy borrow die strategy. We already talked about Larry Ellison and his $10 billion credit line backed by his shares. In addition to that, last year Tesla reported that Elon Musk had pledged some 92 million shares, which were worth about $57.7 billion as of May 29, 2021, as collateral for personal loans. Link to source in description. What about Carl Icahn? In both 2016 and 2017, investor Carl Icahn, who ranks as the 40th wealthiest American on the Forbes list, paid no federal income taxes despite reporting a total of $544 million in adjusted gross income, which the IRS defines as earnings minus items like student loan interest payments or alimony. Icahn had an outstanding loan of $1.2 billion with Bank of America, among other loans, according to the IRS data. It was technically a mortgage because it was secured, at least in part, by Manhattan penthouse apartments and other properties. Borrowing offers multiple benefits to Icahn. He gets huge tranches of cash to turbocharge his investment returns. Then he gets to deduct the interest from his taxes. In an interview, Icahn explained that he reports the profits and losses of his business empire on his personal taxes. Icahn acknowledged that he is a big borrower. I do borrow a lot of money. Asked if he takes out loans also to lower his tax bill, Icahn said, "No, not at all. My borrowing is to win. I enjoy the competition. I enjoy winning. So what are some of the ways to run this buy borrow die strategy? 1. Shares. The companies they own type. 2. Non-dividend paying stocks, the investing kind. 3. Property, lots of mansions and commercial property. 4. Art, frickin' art. Looking at you, Kenny. 5. Life insurance, yes, fricking life insurance. 6. Sports teams, owners get better tax rates than players. And I'm sure there are a ton more that my smooth brain can't even imagine. Wanna gain some real big thick wrinkles on this subject? The University of Southern California tax law professor Edward McCaffrey did a full research paper on this topic and called it the death of income tax, or the rise of America's universal wage tax. I've linked to the study in the description if you want to take a look and see how deep the rabbit hole goes. Apes, this is basically a peer-reviewed study of how the whole freaking system is rigged against us. It's worth taking a read when you have some spare time. So that's it, apes. The mystery is solved. These 3 little words are the code to how billionaires pay fractional taxes. The code to why top CEOs only pay themselves $1 in salary a year. The code to why banks love billionaires so much. The code to why JP Morgan Chase, B of A, Citigroup, and Morgan Stanley dole out $600 billion a quarter in loans to the super rich. The code to why these personal loans to the 0.1% make up 22.5% of all bank loans. The code to why JP Morgan and Citi now loan more to the super rich than all their credit card customers combined. Source to these points linked in description. Buy, borrow, die. Congratulations, Ape. You made it to the end of this video. I hope you have learned something along the way. If so, please take a moment to subscribe to this channel, like this video, and leave me a comment below. This helps me gain some traction in YouTube and actually makes creating these videos worthwhile. Also, feel free to check me out on Twitter. Have a billion-dollar day.